Be fearful when everyone is greedy, and be greedy when everyone is fearful. Wise words spoken for the markets themselves. When I look at this particular chart, I see that basically throughout the near end of 2025 and start of 2026, we have been in extreme fear territory. And very recently, we have been slowly climbing up. But when you go on Twitter, when you go on Facebook and actually look through the sentiment, everyone is still being bearish. And hope for risk assets is pretty much gone. Even though the SPX is making all-time highs, the Russell is making all-time highs. Funnily enough, Bitcoin's structure very recently is been breaking out from downtrends and actually signaling strength on the weekly chart. So what does that mean? Well, with a new chair and nominee, Kevin Walsh, coming in next month, and at the same time, some risk assets already signaling to us strength, could this actually be a move that sustains itself and benefits risk assets? Or are we just looking to range sideways or still have a bearish review on the markets? Find out on this episode. Hello, everyone, and welcome to Strategic Markets, your place for fundamental and technical analysis all at once. And starting off into our midweek session today, we are looking at Donald Trump's statements. I know we always start off with that, it's our favorite. Today, he's basically gone ahead and said that, okay, he's going to extend the US ceasefire with Iran indefinitely. Who would have actually seen that coming? Wait, the taco in chief. Indeed. Trump always chickens out, is what the standing of taco is. So, reasonably speaking, yeah, we're all a little bit exhausted of these things. They do seem to be happening quite commonly over here. So, what does this do for the price of oil when it affects the Strait of Hormuz? This is where I am at currently. We have had an ascending wedge pattern. We have broken down from it because an ascending wedge is generally a bearish pattern. I am possibly currently seeing a continuation of that bear ascending wedge pattern. Now we can break upwards from it depending on geopolitics. My personal bias is that we break down. And that's generally because after you have a rising wedge with a reversal, generally you have another continuation aspect before we go down. So my thoughts on this are it could rally for a little bit. It could even touch this green line over here at the SMA of the 20-day moving average. But the moment it touches that or stays within this region, we could have downwards price action again. But obviously that has to play out, and that's just particularly a bias that I have of mine. But another interesting aspect that we have to discuss today is the next narrative in the market. And the next narrative, guys, is fairly important, is because that is the next Fed chair. The Fed chair, basically, of the Federal Reserve is going to be the person who makes decision, and that's going to be fairly impactful for the American economy. So Kevin Walsh is recently been nominated by Donald Trump to be set up on the Fed, and he was basically summoned today, and he's had discussions within the House, and basically over there they had discussions regarding cost of living being the top issue right now. The Fed has made errors in terms of policy and lost its way a little bit. He has called for fundamental policy reforms. He says he'll be independent of Donald Trump and make decisions on rates himself, even though presidents generally do push for lower rates. And basically says that inflation data has being used is a little bit of an imperfect guidance. So obviously this is going to be fairly impactful news, but Trump has said in the past that interest rates will drop once Kevin Walsh becomes Fed chair. But then again, we know that he is a taco as well. So we don't really know. We can be hopeful, but this would be a very interesting narrative because the way I see it, right now, risk assets are building strength. This SPX, the Russell 2000. And even though we are at war, with America, with Iran, that brings a question that even though the oil is still strong, risk assets are performing high. Why? Is it because they could be forward running a new Fed chair in the market and believe that that's going to be beneficial? we kind of just have to wait for that particular narrative to play out a little bit. So just a little bit of a bias on my side, and just the way how I could see a narrative forming. Watch out on news or things like that, or especially when he steps in or possibly cuts rates, for these kind of movements to occur and basically risk on assets having a bit of a move up. On risk on assets, my favorite asset, obviously being Bitcoin, that you guys know I love discussing that. I've recently been paying attention to Bitcoin on the daily chart. And this has been of real interest to me, because if I actually zoom in and focus on the first bearish flag pattern that we had from November 2025 to January 2026, you can see that Bitcoin actually stayed within this particular bearish flag for a total of 66 days before it decided its continuation downwards, right? Interestingly, in this particular bearish flag pattern, it's actually been 77 days now. And not only have we taken prior local highs, and again currently trying to set another local high within this particular pattern, especially on the daily, we have also broken this particular red line over here, guys. This red line actually signals 6 months of downward trend on the exponential chart. So in the past couple of weeks ago, I showed it to you on the linear chart, and that can be changed via the settings over here, and I can remove the logarithmic aspect or add logarithmic, but this is on the exponential. And a breakout on the exponential chart of a downtrend actually has more benefits, because we are talking and looking at things exponentially now as compared to just your normal linear aspect. So that's one thing. Another thing that I've been trailing very recently is the RSI movement for these two bearish flags. You can see over here, the RSI movement for this 66-day period over here was fairly erratic, as a matter of fact, and it was a little bit like, if you see, it's not as well structured, and it was up and down, fairly volatile. It touched the top and then it went down. With this particular move over here, we can actually see that, okay, initially we had some erraticness, but very recently, the strength that we have been building within the RSI is a little bit more stable. And we haven't just hit the top. Even though we're making local highs at a longer period of time, we are very stably moving up. And when you see that kind of movement in the market, that particular amount of stability, it's really good for the health of Bitcoin if it's going to do a reversal and actually change towards this breaking upwards. Because generally, a bearish flag is a bearish pattern. But if this actually breaks to the upwards, the longer it takes and the more strength it builds, and the more indicators like this 6-month downward trend it actually breaks from, the more hope we have in the market or belief to actually see this particular move follow through. Another interesting aspect that I've been noticing is recently the amount of shorts versus longs in the market. And we can see over here that in terms of Bitcoin's funding rates, a lot of people up till very recently were extremely shorting the market, which means the short squeeze and prices of Bitcoin going up, which makes sense now considering recording right now we're at 78K Bitcoin. Another interesting thing which I've been following is the monthly chart. The monthly chart, particularly for Bitcoin, as you can see, had been finding support since 2018 till 2026 April, found support on this green line within this particular triangle of downwards versus upwards, and now is actually breaking out pretty cleanly. And if this holds until the end of the month, then this is going to be fairly bullish, guys. It'll be really hard to be bearish after seeing a clean breakout upwards and then see it go downwards. That amount of monthly fake out is not very relevantly occurs, and it's more like a black swan event scenario. But if this holds and we do have a positive bullish breakout, now other things to be look out for is, first of all, we also have this RSI over here. Every single time we have touched this oversold on the RSI, we have generally had a move back up, except for the bear market in 2022, which, we can say was a bear market. If you want to call this a bear market, it's a different story. I personally think it's just a bit of a lull in the market, but considering SPX and Russell have been making higher highs consistently. But technically speaking, if this is not a bear market and we actually do recover well from it, the likelihood of us just moving upwards from here onwards is becoming more and more evident as time passes. Another interesting aspect is the stochastic RSI. The stochastic RSI has again recently flipped bullish, and in the past, whenever that's particularly happened, it has again signaled in the market that upward moves are looking highly likely. So that was once over here, that was once in December 2022, again, where we hit the bottom of this particular trend, and now it's happening here as well. So the stochastic RSI, guys, is not a bad signal, especially considering we had this green trend line to signal when we might have a bit of a reversal. Lastly, we talked about Kevin Walsh today, but he actually has already said that not only are digital assets are, going to be something that's going to be futurely beneficial for America, digital assets are already a part of the fabric of the US financial system. And as of now, around 80 million people already in the US own Bitcoin or some have some exposure to it. So these are some very interesting aspects, guys, and that's shaping my view in the market. And the sentiment is possibly slowly changing, and we are going into greed. And just because we're in greed now doesn't mean that immediately markets are going to go down, because when bullish movements start, we actually stay in greed for a fairly long time if we actually have a look over here. Before we look at going downwards. So on the fear and greed aspect, guys, as we have been moving up over here, we have been showing strength, and that could be a reasonable indicator for our sentiment to be reviewed in the market as well. If slowly this is transitioning for most people and risk assets are showing strength, this might be a decent review for us to check our sentiment as well. And I'm not saying that Bitcoin from over here can't go down at all, and we can't have a fake out instance, because there's probably some long liquidities down over here as well for a final clash out before we make our move upwards. But it might not be a bad idea to start thinking a bit more bullish, medium term at least, to short term perspective. But on that, I'll pass it over to you, Steve, to see what are your thoughts in this particular market.
Well, thank you, Yash. Fantastic presentation as always. And let's jump straight into the Bitcoin analysis to lead off from where you're actually discussing a few moments ago. And as we can see, we've actually had a slight dip back into prior support levels from back over in March 2024. And now we're actually basically rising once again. So almost a lot of people put that type of pattern in terms of like a cup and handle kind of situation overall here, as we're basically testing this particular support level. And now we're basically having a look in terms of this particular moving average here of the 150-day moving average in terms of the overhead level to basically take a look at overall. So getting past this level, we could literally then say we've got fairly much some open above area, a bit of blue sky territory. Bitcoin itself not looking too bad from that perspective. The only thing that's potentially dragging it down, though, unfortunately, still remains to be Ethereum at this point. And from an altcoin perspective, that could still be a little bit of an issue because, as we know, Ethereum overall is the driver of a lot of the altcoins. We have a lot of overhead that's still relying over here in terms of this particular resistance area from back over in January 2022. And when we take a look even over at the Ichimoku curve on the left-hand side, we are still forming a lower high at this point in time. Well, we haven't formed it directly, but it has to still breach above this particular former high over here, which is still lying underneath that prior resistance line from January 2022. So until it finally breaches above this area on both the Ichimoku curve as well as the resistance line over here in terms of the standard unit price, until that happens, we really can't say that we've actually got that anchor of Ethereum taken off at this point in time in terms of any of the cryptocurrencies overall. So watch this space when it comes to the cryptos. Once that actually gets released and then basically you've gotten above this 2,425 level, then you could really say that things things are really starting to move and get going in relation to cryptocurrencies. But in the grand scheme of things, we've still got a lot of movement going on in relation to the markets overall. The Russell, I know Yash loves talking about this in terms of being a yardstick in relation to cryptocurrencies as well. Now remember, over the weekend we were talking about the overextension of the indices in relation to the short-term moving averages. This is still in play. We could potentially be seeing a retracement back towards their short-term moving averages, maybe even heading backwards towards filling up this gap for starters, and potentially even coming backwards towards, say, the 50-day moving average as well. Now that would be an extreme if it was to come back all the way back down to here. But at least coming back towards these short-term moving averages is not something that would be unexpected. So keep an eye out for something along those lines there. We can already see this big red candle that actually formed on Friday, on Tuesday, I should say, essentially being something that's in the short term. Now, this is also after all of the Kevin Walsh kind of aspects there, the Taco Tuesday aspects, call it what you will, but these are the kind of aspects that are actually occurring in the markets right now as we speak. Whether we get that retracement, we'll wait and see. But this has actually happened on all of the major indices when we think about things. The Dow Jones, you can see that right there. It's very pronounced on that one in particular, but also on the SPY and also on the Qs. So we were talking about this on the weekend, expecting a retracement to come backwards. Keep an eye on that as to whether that will happen. The interesting thing, though, is it hasn't been reflected on things like the VIX in terms of the volatility. You would normally expect that as we're seeing a retracement to be a lot more fear in the market. Go back to what Yash was talking about in terms of fear overall, in terms of fear and greed. We're not seeing that kind of thing happening in the overall markets in general, especially in terms of, say, the crypto markets. We're not seeing it at all. So in terms of fear and greed, we're definitely heading more in terms of a greed aspect. People are accumulating things, and you can see that being reflected, especially in terms of things like the VIX. We're really not seeing any form. Now, in relation to the dollar as well, we'll take a look at that. The dollar itself has really fallen very much out of favor ever since it went down below the former resistance area when it was below here. Then it was acting as a support area as it was trading above here. Now it's acting basically as a resistance area again as it's trading below the area. So really it basically is a risk kind of indicator more than anything else, and there's very low risk more than anything at this point in time as we're talking about the US dollar right now. So that tends to suggest more than anything as well that everything's more of a risk on situation in relation to investing overall. So that's quite a good sentiment as well for the market in general as well. But the most interesting aspect when we really take a look at things in the grand scheme of things with the markets is really in the bond situation. We've had this massive move, and we were talking about this on the weekend as well. We've had a massive move in the markets, but no action whatsoever in relation to the bonds. And in fact, with the bonds, everything's deciding to come back into this range beneath the support level that was formed back in January, and potentially even heading back towards the September lows at this stage, because we've actually closed beneath that support now. This is a little strange. You have to remember, the bonds market is larger than the stock market, and the bonds guys are very, very smart people. What is happening here? You would normally expect a lot more trade and a lot more activity going on here in the bonds market. I'm shrugging my shoulders because I'm not sure what the heck is going on at this point in time. I'd be expecting a lot more activity going on here, but there is zero movement happening. Don't know. So if there was going to be a lot more movement in terms of the stock market itself, I would be expecting this to be moving in some way, shape or form as well, to be showing that there is more institutional aspect going on here too. But we're not seeing that. This tends to indicate to me, at least in terms of my own mind anyway, that if we're not seeing much action going on here in the bonds market, then perhaps what we're seeing in terms of the stock market overall as well is a lot more retail investment going on rather than institutional investment going on. So perhaps it may be more cautious and more worthwhile to be thinking that perhaps in terms of any investments that are going on at this point in time, maybe make sure your position sizing is a little bit less than what you would normally do, because things could be turning very, very quickly in terms of the fact that there is more retail buying going on rather than institutional support at this stage. So keep that in mind in terms of risk management in relation to anything that you're doing at this point in time. And of course, let's have a look at gold and silver. Now, in terms of gold and silver, we were actually seeing on the weekend that essentially gold was basically making a bit of a move in terms of potentially coming up and being supported by this VWAP being the green line. Not so much. It actually tested it, and now we're basically coming back down beneath the short-term moving averages more than anything else after it failed to breach the 50-day moving average like we were talking about over the weekend. Now, what does that basically mean for gold in terms of things overall? Well, at the minute, we're basically in no man's land as we're now testing the 100-day moving average being this white line. So wait for some clear direction in relation to gold at this point is what the chart is essentially saying. And in terms of silver, it's pretty much the same deal. That is pretty much back down testing the 100-day moving average as well at this point in time too. What does this all mean? So obviously, there really hasn't been much change in terms of our perception of all of these charts over the past couple of videos that we've actually been making, because it all really comes down to the levels more than anything else. There has been definitely a shift in sentiment over the last couple of weeks, really, in relation to everything that's been going on. A little bit more risk is coming into the markets in relation to certain instruments. We've been noticing that, especially in relation to crypto, especially in relation to gold and silver, and maybe there's a bit of a rotation going on now, especially from the metals, maybe more across into crypto at this point in time as well, which is rather interesting there. Keep an eye on those levels. Keep an eye on your own investments in terms of things as well there too. And I've got a feeling more rotation is going to be occurring in the short term, and it's very, very important to be able to monitor things and be able to twist and turn very, very quickly in relation to what you're basically doing. This is the kind of environment where things are going to be changing very, very quickly, very, very often. Much like our good old friend Trump the Taco Man. Okay, this is going to be the way it's going to be for quite some time. And everything's reacting extremely fast on news events. So be nimble is probably the biggest piece of recommendation or suggestion that anyone can ever give you at any point in time. Obviously, we can't provide financial advice, but that tends to be the suggestion that the charts are providing at this point in time. Keep an eye on those levels. And I think that's going to be the general kind of suggestion to be able to provide for quite some time overall. I've got a feeling that's going to be the suggestion that we'll be providing as well from the charts over the next number of videos here as well. So keep an eye on that. Yash and I will be keeping you updated on those for quite some time overall. So definitely make sure you click that subscribe button and keep up to date with everything that's happening there. And we'll keep you updated as to how the charts are unfolding over the next few weeks, next few months. We'll hold you by the hand and we'll keep you up to date. And with that, I'll pass you back over to Yash for the last concluding.
I couldn't agree with you more, Steve. I'm really glad you're seeing this from a technical perspective because the fundamentals are showing something very similar. We have a new Fed chair that's coming in. We have legislation that's going pro-crypto relevant to the Clarity Act as well, coming up very soon. And with that aligning with the technicals as well. And another interesting news that came out today is the fact that Trump is going to have to refund his tariffs. And when that refund of tariffs occur, guys, finally enough, they don't actually go back to the customers who paid for the products, but they go back to the businesses who had to pay. And those businesses will now have extra spending cash for more jobs, more investments, more stock buybacks, which could actually push the market further. So finally enough, fundamentals are lining up. And whether this was a play from Trump to set up tariffs knowing he'll refund them back to businesses or not, well, that's just conspiracy. But all I can say is if sentiment is shifting, sometimes it's okay to change with the sentiment as long as you're monitoring it safely.
Absolutely.
But with that being said, thank you for attending our session today. If you liked what we shared, feel free to drop a like. If you think we can do anything better or something you'd like to add or you want us to cover, please drop a comment. We really do appreciate it, even if it's negative. We'd love to hear your opinions. And lastly, if you're enjoying the journey and you're appreciating coming through with us and get an edge, please feel free to subscribe. We'd love you to join the road with us. But on that, thank you for jumping in, and we'll see you to the next one.
See you next time.